All right, so welcome back to another episode of the Barron Report, our special series on the restaurant impact by the coronavirus. And we've got some great late-breaking news coming to you live. You might be catching this over on Twitter, YouTube, Facebook, wherever we can get this out. And that is late-breaking news from the National Restaurant Association announcing a stimulus plan proposal to the House. So this will be a very interesting scenario. We're going to break it down for you, go through all of the key points of the stimulus plan, and give you some commentary on what we think might work and where we could see some situations for you operators out there. In the meantime, we're going to cover what we are seeing in terms of data for the industry right now in terms of impact. Estimated restaurant closures currently are still piling in. We're actually updating this almost daily, but we will see a new report on April 1st. Right now, 28,695 restaurants we estimate will be closed. These are not closures because the cities or states are asking you to close. These are closures as in permanently closed or most likely not coming back. By 3/30, with a count of about 56,274 by April 20, and a number of 81,000 restaurants by May 25th. And the numbers are continuing to rise as we start to see the real impact of many of the state closures. Right now, we're at 28 states that have some sort of either limited service or no dine-in service available for the restaurant industry and the business within it. This is the estimated revenue impact. Now, currently, we track about 45% of the industry when you look at actual unit counts. Right now, by 3/30, we're looking at about a $2.9 billion drop, $4.1 billion drop, and a $2.7 billion drop through May 25th from a weekly, these are weekly numbers, weekly revenue, from a $5.1 billion weekly revenue number. So these are some pretty stark numbers that will continue to take hits as we continue to grab more data through Foodable Labs. We'll continue to report on that as new information comes available. I want to break into the National Restaurant Association's stimulus plan that was presented to the House today at 10 a.m. So let's kind of walk in through each one of these elements. First is authorize the Department of Treasury to create a $145 billion restaurant and food service industry recovery fund. And the way they're going to do it, there's some key bullet points here. One, direct Treasury to create the program within 15 days of enactment. That's going to be pretty much a unbelievable time frame. I just don't know that our federal government can get to that level. I'm very concerned about that in terms of being able to react that fast. An immediate sales decrease of $225 billion, 25% of the estimated $899 billion 2020 annual sales. That's what the NRA is estimating this will do to our industry. So as you can see, we're looking at about, let's say about 25%. Oh yeah, 25%. Our numbers are a little bit more stark than that. And the question is whether or not the number of restaurants that actually get hit will even report. So that's going to be some interesting data as we look forward. Also, number three, an immediate economic impact of $675 billion is what they're proposing to the House, saying this is what our industry is worth to the economy. And I think this is a good point that maybe the House needs to really understand just how ingrained the restaurant industry is into our economy. This is the big one, which is number 4, and that is a minimum loss of 5 to 7 million jobs. That's almost half of the industry. If this goes to 7 million, and the likelihood is this is going to go higher, we only have 15 million people working in the food service space. When I say only, it's the second largest employer in the United States, being the food service industry. 7 to 8 million job loss in this industry would absolutely be devastating and would pretty much recast the entire restaurant industry going forward. Let's go to our next topic, and that is the $35 billion for community development block grants for disaster relief. This is It's what they call the CDBGDR assistance plan. This program is utilized when regions and communities of their local business may not recover after a disaster, an emergency or a disaster. Business recovery, you can kind of look back on what happened with Katrina. You could look back in some of these plans being employed during hurricanes. But nothing has been deployed this wide sweeping in terms of the entire country. So that's going to be an interesting thing to see how that starts to flow forward. Business Recovery Grant Program provides grants to businesses with fewer than 500 employees. This is going to be a big one because that's pretty much most of the restaurant industry. Compensation based on days of lost gross revenue. Maximum grant amounts of $50,000, $100,000, $150,000, and $300,000 were available in these programs in the past, and that's essentially what they're calling for, is to move to these kinds of programs. Assistance in allowing businesses to defer mortgage, lease, and loan obligations. This may actually get passed. I think this could be something of the elements that could move quickly because it is just a signature, even though they don't necessarily have to get sign off on this by many of these conditions. The scenario I fear here is the lobbying groups that will be in a heavy opposition to this. They're urging Congress to take steps toward ensuring lenders offer temporary waivers and penalties on mortgages and other debt by small business. The other question is whether or not they can defer things like state taxes, things of that nature, even though that's not necessarily included in this portion of the proposal. Loan insurance options for impacted small business. So this is $100 billion in federally backed business interruption insurance. As of March 17, 28 states, as I mentioned earlier, have ordered closures for their restaurants and bars. Congress has got to approve a timely insurance program through the U.S. Treasury that would allow for businesses to receive their insurance benefit under an expected time frame, which in other words, meaning speed this up because every day is going to count in most cases, because for every day that this is delayed, we're losing restaurants and the employees that are within them moving forward. So you can kind of see how the ripple effect would be fairly dramatic on the industry. Next slide is federal loan program equal to lost revenue. This one's a little bit more complicated, but essentially create a federal loan program for a business to get a loan equal to lost revenue during the emergency 3-month period with the option for extension through 2020. There's some key caveats to this, and this is the one that is most important, is the loan forgiveness. So the loan would receive forgiveness as long as the employer keeps its workers on the payroll without reducing their pay, including workers self-quarantine and or unpaid sick leave. So that would be a pretty major component. The question would be is how big would the loan stimulus be from the federal government, and whether or not some operators would qualify for it to be able to get to that level of coverage. The last item is this legislation also keeps more obviously more Americans in the workforce rather than a public assistance when the ongoing public health emergency subsides. So what they're saying there is simply just, hey, we want to keep people working so we can continue to stimulate the economy as we move out of this and hopefully avoid a recession. The likelihood of that is, in my opinion, not possible. The damage has already been done, and we're still weeks, if not months, away from a true resolution on this. So I fear that we are in a position that we will, as operators and as business owners, are going to have contingency plans in place because we may not be able to see the bailout actually occur in some of the businesses that are out there listening to this video or podcast right now. It just may not be there in time. $45 billion in expected access to effective and efficient and affordable federal and conventional loans. That's part of the program. $130 million in disaster unemployment assistance. $130 million, in my opinion, is literally nothing. I mean, it's $130 million, but for an industry the size of 15 million people that are literally being furloughed or literally just walking out of a restaurant, not coming back, this is going to be a very small dent in unemployment insurance, and I just don't know. That needs to probably be more in the tune of about, 500 to 600 million, maybe, that would be able to get us into a position to at least sustain some of these workers in this time of need. Tax measures, this is something that if we do get on the other side of this in any understandable capacity of operations, these are the things that what they're proposing, which is fix the qualified improvement property, the QIP tax, technical correction, which is Congress can help the economy immediately after fixing this by just amending their returns and receiving money back that they already overpaid. So it's just saying, hey, let's accelerate this. It's no cost to the government to do this, but just fix that particular issue. The other is assistance in allowing business to delay, defer, or forego tax obligations. This one is huge. There is absolutely no way the federal government is going to approve that particular part of a stimulus plan. I just cannot see that happening. The government is still going to have to stay in operations, and tax reduction at this level for businesses, I'm not seeing it happen. We might see some elements there, but I just don't see it taking on that kind of structure. Tax credits for businesses that are retaining employees, absolutely, that could happen. And I think that's a huge benefit. But again, it's providing that the businesses can actually stay in business. And that's going to be a key architectural maneuver by the administration of how fast we can get back into normal society here versus the continued shutdowns that we are seeing right now, both from retail centers, pretty much any type of retail store today, limitations on goods availability. Pretty much we're down to the necessities here in the U.S., and that is dire situations. Other item here is tax credit for businesses or reduced credit card interchange fees. Listen, the credit card companies right now, because of online sales, are probably not being hit as hard as the rest of the industry. At the very least, I'm hoping and imploring that the credit card companies will take the initiative to start to lower the transaction fees to these businesses. Every dollar that cannot go into those coffers is potentially a job that could be saved and or even a business that could be saved. So we'll see if that can actually happen. In my opinion, I just don't know that that's reality and the time in which it would take to get that moving, unless someone like MasterCard or Visa stepped up and said, we're going to just, reduce fees by 50%. That would be the call I would propose to those businesses. Last is a temporary payroll tax cut that increases economic activity, reduce the employee's share of Social Security payroll taxes by 2% points from 6.2 to 4.2. This is reasonable. Again, I just don't know whether or not they can move it through Congress fast enough to get something like this implemented. That is still going to be a major question. And then hold the Social Security Trust Fund harmless through a transfer of general revenue. So these are some pretty complicated maneuvers that would take on and be put into our tax system. The other aspect of this that I'm really concerned about is basically the administration of it, because that's going to be a major part of it. The CPAs, accountants, attorneys, to be able to really understand what this is going to mean in terms of tax implications to small business, it really is going to be a very interesting scenario. Obviously, with April 15th coming up just around the corner, it's likely the federal government will probably move tax day. I feel that they may defer it to give businesses time to at least get in a position to kind of assess their current situation. And I think that's going to be the biggest scenario. So there you have it. That was the stimulus plan proposed to the House today by the National Restaurant Association, which is pretty significant, $145 billion stimulus program that could potentially have major impact on small business here in the United States. And of course, when you look at the restaurant industry, about 80% are small business operators, independent operators that employ on average about 15 people each restaurant. And those are significant numbers when you're talking about 800,000 to 1 million locations out there in the United States when it comes to restaurant, dining, bars, and eating places. This could have and will have a long-lasting effect. What I would suggest for you operators that are out there that are listening and watching into this podcast is continue your contingency plans, because you've got to be able to be prepared regardless of what the government does. This is something that you've got to take into your own hands and move as quickly as you can to get your position in place, whether it is preparing your operations for closure, or maybe you're trying to save a few jobs and you're reformatting your business model. Those are the kind of things you need to be thinking about in terms of really doing it. We have to run our business on a day-to-day basis, and we've had to do it forever without the help of the federal government, but instead, most of the time, it's in lieu of. So don't expect that that's going to be coming down the pipeline anytime soon. I hope and pray that it will, but understanding the speed in which our federal government moves, I just don't know that that can actually happen. So I implore to you guys is continue your contingency plans, continue your business operation and your thinking and entrepreneurial spirit, because I think that's what's going to pull us out of this thing and get some businesses on the other side. We're going to continue our reporting right here on the Barron Report. We'll be talking about this with operators who are in the field right now dealing with this, including an operator right out of San Francisco who has a 7 million population on lockdown, and he still is out there operating his business and trying to make and save jobs in the restaurant industry. Those are the kind of operators we want to hear from. Reach out to us, producer@foodabletv.com. You can also hit me up at Paul Barron on Twitter. We'll catch you on the next Barron Report.